I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers podcast show. It is Monday, August 1st.
We love August. And today is the interest rate update.
And if you're new to the channel, be sure to subscribe, comment, and like. We do this Monday through Friday. And remember, this is for informational purposes only. This is not financial advice.
That's right, folks. We are smart, but we are not that smart. But we're pretty smart, though.
It is great starting a month on a Monday.
Yeah.
August 1st on a Monday.
That's right. You just have a little line in the sand.
Yep.
We just crossed over it.
Yep.
Clean break, clean month.
July's done. School's starting here very soon for a lot of people.
Yeah.
And interest rates are better. We're in the solid fours. For that 30-year fix, we see at 4.625 down from Friday. The 15-year fix, we're still seeing about 3.99%.
The 30-year FHA is 4.375, and the 30-year VA 4.375. So FHA and VA same as last week. I guess the only thing that changed was that 30-year.
Yeah, generally speaking, we've seen this downward pressure. Downward. Well, at least we could tell. And again, when we quote rates, we're showing you these rates based off of these loan assumptions and for conventional FHA and VA. But when we quote the rates, I mean, the market is constantly changing, and we can kind of tell where kind of the micro movements in the day.
Yeah.
And I think so far it's been a downward trend. Now it could change. That trend can change tomorrow or tonight.
Yeah. But and I think eventually what we should have is like a little slide that says, hey, I know what interest rates are, but why don't you give me a matrix that tells me how good I should feel about the rates? Like, that little, like when you go to the hospital and they say, hey, how's your pain? 1 through 10, and 10's like crying. Rates right now, 4.6.
Yeah.
I mean, that is a feel-good place. And we're not just saying that, as mortgage brokers. This is something, and again, when you look at this slide here really skews it because you're looking at the ultimate. It was too low back then. Comparison. It was just too low.
In December 2020, this goes back 4 years. This was the low, about December 30th, 2020. And then the high was hit at June 23rd. So about a little over a month ago was that high. If you were to look at if we created that index, everybody would have a big smiley face right here. And up here, things they weren't feeling great. I mean, things were feeling a little scary. But today, if you were to compare, this was probably like, 5.5% that we were seeing rates. Today's 4.625 would really put, I would say, a smile on a lot of people's faces.
I mean,
especially if they were home hunting in the last couple months.
Yeah. So, and again, I think most of what we do is you have to be realistic about what you do and how you do it. And the interest rates that we had back in 2020, 2021 really were not realistic. So when you compare yourself against something not realistic, you're only going to set yourself up for either letdown or,
what do you mean by not realistic?
Go back to March or go back to, September of 2019. Where were rates? Almost about where they are now.
Yeah.
Were people buying homes back then? Absolutely.
Yeah.
Were people happy? Absolutely.
Yeah.
So,
July 2018, rates were pretty much at 4.625. Now, this is the Freddie Mac chart. And Freddie Mac is surveying banks, the quotes that banks are giving. And generally speaking, Freddie Mac shows higher rates because, we're a mortgage broker.
Yeah.
And we are quoting these rates. These are with no points.
Right.
Okay. There's no points, no extra fees to get those rates as long as your scenarios are like this for conventional FHA and VA. But a lot of banks are charging higher rates.
Yeah.
But most are. And that's
right.
what this is reflecting here.
And then I guess my whole point is to go back. If you're looking for a home or you're looking to potentially refi, people were buying homes and refinancing with almost the exact same pricing just 3 years ago.
Yeah.
And they were very happy about it. But if you compare it to what it was 24 months ago, you're going to be a little bit frustrated. That's not a good way to live. It's not the right way to see it. So I think we had unseasonably low interest rates that hopefully we don't go back down to, frankly. I'd love it selfishly for loans, but from an overall economic health standpoint, we need to have interest rates probably kind of where they are now, maybe a little bit lower, but still, you can't give away money for free. So, okay.
Yeah, okay. So there's a lot in there because, of course, how our policy, how the Fed is going to continue to print money and all that will change. I mean, the tone, our debt, we are addicted to low rates.
Yeah.
So I would say, are we not going to go back down? We may not. I mean, I think we probably will go back down.
I think we will. I'm just saying we probably shouldn't.
Yeah. What we should, and what will happen. I think that we will go back down there, but it'll take time.
Yeah. And if you're waiting to refi until it goes down, well, let's
Yeah.
wait 18 to 24 months. We don't recommend that because if they hold steady here or they even go up again, then you're going to look back and say, boy, I wish I would have grabbed that rate. So we'll simply refi you as rates go down. As they drop, we grab it. We wait. They drop again, we go grab it. You're constantly grabbing that rate as it's sinking. And you don't feel bad about it. The only reason why you'd feel bad about doing 3 refis within like a 3-year period is if you had a crystal ball in your closet that you never told anyone about, and you could have known that you should have waited. Otherwise, if you don't know the future, you refi as those rates drop. So you always have it. So.
All right. So if you're, again, new to the channel, please subscribe, comment, and like. We'll be back tomorrow with another interest rate update. Take care, everybody.
All right. Thank you, folks.
Thank you, everyone, for watching our show today. If you have questions, be sure to email us at rates@azmortgagebrothers.com, and be sure to take a look at all of our other videos on our channel.